Have you ever dreamed of owning your own house in the UK, especially as an immigrant? Buying a home can be an exciting journey, but it is also filled with decisions and paperwork. And in today's video, I'm going to be sharing with you the step-by-step process of becoming a first-time homeowner in the UK and how to make the mortgage process less stressful. So I recently bought my first house in the UK as a tier 2 visa holder within 7 weeks, and it was a case of opportunity meets preparation. Now, you probably think buying a house in the UK, especially as an immigrant, is a daunting task, and honestly, it's easy to see why. There's so much to consider, from finding the right property to navigating the complex legal processes. It is no wonder why many potential buyers feel overwhelmed, unsure of where to start or what to expect along the way. But despite the challenges, buying a house as an immigrant in the UK can be a thrilling experience, and really, with the right guidance, it can be a whole lot smoother. The process of buying a house in the UK can be broken down into several key stages, including finding the right development, understanding your budget, the mortgage application process, the reservation and exchange process, and the completion and moving in. So in this video, we'll be covering everything from understanding your budget and finding the perfect development to navigating the mortgage process and completing the sale. Step 1, understanding your budget. First and foremost, you need to get your finances in order, determining how much you can afford to spend and exploring your mortgage options. You need to understand that your budget is a crucial step in the home buying process, and by carefully considering your income and expenses, you can determine what you can afford and avoid overextending yourself. Start by assessing your savings and income. How much can you comfortably afford as a monthly mortgage payment? So mortgage payment is a regular installment made to a lender to repay a mortgage loan. Mortgage payments are usually made monthly over a set period of years, and a mortgage loan is a long-term loan that is used to buy a home or a property. Now, before you get serious with saving, it is important to first boost your credit score and maintain a good credit score. Pay off your credit card debts, and also most lenders will not move ahead with the mortgage process without all of this in place. You can make use of various mortgage calculator online to determine how much you can afford and how much your mortgage will be. Many UK banks also offer these services to their customers and the general public. Next, start saving for your dream home. You can create a dedicated savings pot in your bank app in order to deposit money monthly and potentially earn interest. Another option is opening a government-approved investment account, such as a lifetime ISA, also known as LISA, in order to help you fund your first home purchase. Step 2, finding the right development. You want to make a list of the areas, the cities, the towns, the locations where you ideally would love to live in. It may be the town or city you recently or currently live in, or you may want to venture outside of there. Then, it's time to start searching for the perfect property. Taking into account factors such as location, size, condition, you will also need to be sure if you want a new build or an old build. Now, in this particular video, I shared what you should look out for in both, so you may want to check it out. It's also worth noting that when you are buying an old build, you can usually negotiate prices. However, for new builds, house builders may not be keen on dropping the headline prices, but they may reduce it with extras and incentives. So for old builds, let's say you found a house online, you reached out to the agents who listed it, and then you show your interest. They will send you more information about the house, and then you will choose a date and time to view. After that, if you like the house and you want to go ahead, they will ask you to make an offer. That is when the negotiation begins. When your offer is accepted, the legal process can begin, which involves a series of checks and surveys to ensure the property is sound and free from any major issues. Now, this can be a lengthy and costly process, but it's essential to get it right in order to avoid any potential pitfalls down the line. It's also important to consider the current state of the market and how it may impact your purchase. Conducting surveys and inspections is a crucial part of the process, as it can reveal any hidden defects or issues with the property, and this can also be costly, but it is essential to avoid any nasty surprise further down the line. It is also very vital to consider the neighborhood and local amenities, as these can have a significant impact on the property's value and desirability. For example, if you have a family or you plan to have a family in the future, you will want to be sure that there are good schools around. Are there parks around? Are there playgrounds nearby? How close are the supermarkets? What about transport links? What are the bus routines like? By taking your time to research all this, you can make a more informed decision and avoid making any costly mistake. Now, if you are buying a new build, usually you go onto the developer's website or just search online for new builds in your area or in the area that you want to live in. Then you check their houses and see what style you want, what style you desire. After you found some, now it is time to take a trip to the development and see for yourself. Now in the UK, like somebody asked me, viewing is free. Viewing houses to buy is definitely free. You are not charged for coming in to view houses. So usually they will have these showrooms of their different house styles, and you can go in, check it out, see if it is what you want, and then by the time you compare different showrooms and different house styles with different developers, you will know which one you want to go for. So when you go to visit a new build and you're having a chat with the sales advisor there, make sure that you ask as much questions as possible. There's no stupid question, okay? Ask away. Ask as many questions as you have in your mind. It's worth it to ask about the development. When do they plan to finish building the development? Especially, are there any extras, any incentives, any home builder scheme that you can benefit from? Are they participating in the government schemes that are available for first-time buyers? You know, like the own new rate reducer, any form of help to buy schemes or alternatives? Do they offer deposit contribution? Or do they offer mortgage payment? You know, some of them offer to pay part of your mortgage for, the next 12 months after you have bought their house. Make sure that you ask for anything that could benefit you in every development you go to visit. May I also add that if you are viewing a new development, or really any house viewing you are going for, you need to book an appointment ahead of time, because usually when you go to this development, they might not be there to see you. That's number one. And another thing is that the salesperson might actually be involved or engaged with another customer. So it's important that you go through their website, know when their opening times are, and call ahead of time to book a date and time for your appointment. Let me also add that it might be worth it to speak with the residents of the area, whether you're buying an old build or a new build. For some new build, there are people already living there and a phase is already completed. Maybe they are just starting another phase or completing another phase of the estate. Then you can walk around the estate, speak with people you see in there. How is it living there? Ask about supermarkets, about what they think of the estate, how responsive are the agents or the home builders are, and this will help you a lot in making a decision about whether or not you want to live in that area and also in that development. Step number 3, navigating the mortgage process. Now that you have found the house that you want, the next step is to get onto the purchase and legal aspects. Now, getting a grip of the legal process can be a challenge, but it is essential to always stay on top of things in order to ensure a smooth transaction. This is the part where your mortgage advisor and solicitors come in, and they work hand in hand in order to ensure that you buy your dream house and on time. The major question most first-time home buyers have is, do I need a mortgage advisor? I know that I asked that question for myself. However, if you're a first-time buyer, you definitely have the most to gain from mortgage advice, as the application tends to be more challenging and the whole process is new to you. It may also lead to a better deal, potentially saving you time and thousands of pounds over the mortgage term. But you may decide to do it yourself and go directly to the lender, i.e. the bank. So if your bank has this service, it is worth speaking with them about buying your house and comparing different deals. And if you are going with having a mortgage advisor, then there is a question of, how do I get a good mortgage advisor? You can go online and search for mortgage advisors in your area. Some people do not mind interacting with their advisors online, while some prefer to go to their office and have a face-to-face discussions. So know which one you prefer and go for it. Keep that in mind while looking for a mortgage advisor. Also, one of the best ways to verify a company or service these days is checking out what their current customers are saying about them. So go to review websites such as Trustpilot to confirm your advisor and solicitor are on top of their games. For those asking, I have left the details of my mortgage advisor in the description box below, so feel free to reach out to them. Passport, share codes, in order to know how long you have spent in the UK and how much you have left on your visa. They will also request for your bank statements, your credit card, your loan balance and repayments. And all these are to ensure that you have a good debt to income ratio. And having a good debt to income ratio generally improves your chances of approval. Once the mortgage advisor has assessed your financials and affordability to satisfaction, they will give you a mortgage in principle, also known as decision in principle or mortgage promise. This is a statement from the lender saying that they will lend a certain amount to you for the purchase of your home. And no two mortgages are exactly the same. And with the help of your mortgage advisor, you will make a lot of decisions about whether or not you want a fixed rate, current interest rate, and you will also be comparing offers from different lenders and the length of your mortgage term, which can impact your monthly payments and overall costs. Now, the other things you need to consider include down payment or deposits. The size of your down payment or deposit can influence your interest rate and overall loan cost. That is, the higher your down payment or deposit, the better the interest rate that you could get. Also, government schemes. You need to explore government-backed schemes like the Own New Rate Reducer that can make home ownership more affordable for you. A video on the current government schemes to help you buy your first home is on the way, so make sure that you click on the subscribe button below and tap the notification bell so that you'll be the first to know. Also, you need to know about your mortgage insurance. If you have a small down payment, you may need to purchase mortgage insurance. Another thing is home insurance. Many lenders will insist that you get a home insurance for your new home as a condition for lending to you. It is also worth asking your mortgage advisor if they are independent mortgage broker or tied mortgage broker. While an independent broker can source mortgages from the whole of the UK market, a tied one will be restricted to certain providers, so they may not be able to give you such good deals. In addition, there are some mortgage advisors that operate as multi-tied brokers, meaning that they work with a panel of lenders but not the entire market. Your mortgage advisor will also give you a mortgage suitability report based on your incomes and the proofs that you send to them and the property that you wish to buy. Step 4, the reservation and exchange process. Now that you know the house you want to buy and you have a mortgage advisor and lender, the home builder or the agent will require you to pay a reservation fee and also request your mortgage advisor and solicitor details. This reservation fee is a deposit to secure the property and remove it from the market. The amount varies depending on the developer and the specific property. You should understand the terms and conditions that are associated with this reservation fee, including any potential penalties for withdrawing from the purchase. The time between reservation and exchange can vary, but it is generally between several weeks or months. Now, there are some factors that can influence the timeline, including the property's stage of construction, the developer's workload, unforeseen delays, among others. So it's important to stay in touch with your developer, the agent, the mortgage advisor, the solicitor. You need to be in constant communication with all of them. When buying a home, your solicitor will play a key role in the process from start to finish. The solicitor is in charge of checking your mortgage conditions, ensuring you have the funds for a deposit, and that you have the necessary building insurance in place before exchange of contracts. They also conduct searches, apply to land registry on your behalf, complete stamp duty documentation, among other things. Stamp duty is a tax that is levied on the purchase of properties in England and Northern Ireland. The amount payable depends on the property's value and any applicable exemptions or reliefs. Now, for first-time buyers whose house is between 425,000 and below, stamp duty is free, like it is £0. While a 5% fee applies from houses between £425,000 to £625,000. Also, there are stamp duty calculator websites online to determine the exact amount that you'll be paying, especially for next buyers. Now, when the time comes, the solicitor is going to receive both the deposit funds from you and the mortgage funds from the lender, and they will then be in charge of transferring the funds to the seller solicitor and completing the sale. They will also facilitate the exchange of contracts between you and the seller. The contract will specify the completion date when the property will officially be transferred to you, and it may include conditions that need to be met before completion, such as obtaining a mortgage or conducting property surveys, and also the builder's terms and conditions of living in the estate. Now, a property survey is a comprehensive inspection of a property's condition by a qualified professional. It provides a detailed report highlighting any potential issues such as structural defects, dams, or electrical faults. This information can be invaluable when making a purchase decision or assessing a property's value. There are three main levels of property survey in the UK. We have the RICS Home Survey Level 1, which is also known as Condition Report. We have the RICS Home Survey Level 2, which is known as Structural Condition Reports. And we also have the RICS Home Survey Level 3, which is known as the Building Survey. The lender will also do evaluation of the house and probably a survey. However, you should consider getting a home survey, especially if you are planning to buy an old build. It costs between £250 and £600, depending on the level you want to go for. Now we are on step 5, completion and moving in. The completion date is typically agreed upon in the contract, and it marks the official transfer of ownership. Now, while developers aim to meet the completion date, unforeseen circumstances can sometimes cause delays, so you need to stay in constant contact with the developer and your solicitor in order to be informed of any changes to the completion date. For new builds, you usually have a home demonstration day before the official completion day. This is where the home builder will show you how things work in your new home before you move in. Then on the completion day, you will sign paperwork and then get your keys. As soon as your completion date is stated, you usually will have started planning your move. You should try to organize your move well in advance, including booking movers, packing your belongings, arranging utilities and services. You need to notify relevant organizations such as your banks, insurance companies, the DVLA, utility providers, and so on of your new address. And this is very, very important. You also need to obtain a comprehensive home insurance to protect your property and belongings from damage, theft, and other risks. You need to ensure that your building insurance adequately covers the structure of your new home. And in this video right here, I actually shared how to save for your new or next home faster. So if you are looking for verified tips on how to save for your new home and be a first-time home buyer in the UK, then click on this video and I'll see you there.